Hi everyone, welcome to Industry Insights episode 3. I'm joined today by Susanna Ghezal, Anthony Pirrottina, and Demi Carigliano. Guys, welcome.
Thank you.
Thanks for being here. Much appreciated. Most of our audience will probably know who you are, but if you could just quickly introduce yourself and a quick summary of what you do, Susanna.
Sure. So I'm Susanna from Asquired Square. I run a buyers agency in Pirrottina, and we source off-market opportunities, very diverse. We do wealth creation and also development sites.
Awesome.
And owner rock, of course.
Awesome. Boys?
So Anthony and myself, we actually run the office for Knight Frank in South Sydney. We're based out of Alexandria. Predominantly we do development site sales, investment sales, mostly anything with upside, but let Anne touch on a bit more.
I've been doing so for 10 and a half years.
Yeah.
In a past life, we've done a lot of deals with Adam as well.
Yeah. So it was good times back in the days up until 5 years ago. So good to see you guys have gone on to bigger and better things after I've moved on. The topics for today, we're going to be covering a lot of what we see to happen and play out over 2025. But before we do that, Demi, I'll go to you first. Just a quick summary on 2024, general sentiment about buyers and what challenges we were dealing with as agents when trying to get deals over the line.
I think 2024 was interesting because it wasn't like 2023 where we're, coming in from a series of interest rate hikes and a series of rising, construction costs. Yet, obviously, there was still some in 2024. I think it was slowly tapering back. So we saw that I think buyers specifically, were sitting and waiting for, a bit more opportunities. And what we did see is that there was a lot more supply to come to market. People that were on market probably had to sell versus, didn't need to. So we kind of got to a point where I think it was a very challenging market, I would say, to be upfront. Like, it wasn't straightforward, easy list and buyers would come to you and sell. You'd have to, fight tooth and nail to just get any buyers to present offers or reasonable offers. Otherwise, there was a big discrepancy between, what the owners wanted versus where the buyers are at. But that's specifically probably talking in asset classes like residential development sites, even owner-occupiers to a certain extent. But it doesn't discount the assets that obviously trophy.
Yeah.
They still did, I think, typically well.
Yeah. And just to continue on from that, the nature of the type of listings that you were bringing to market last year, like what were the motivations of those owners?
And we all know residential mixed-use development sites was difficult. You really only went on market if you had strong motivation to sell, because that market was obviously challenging. A lot of existing buildings where you could extract value out of the improvements, those deals still made sense.
Yeah.
Less impacted by the changes in construction costs. But even pure investments on long leases were difficult, right? Because cost of debt is a function of what that property is worth. So that's why I think between ourselves, between the four of us, volumes were significantly lower, right? There were not a whole lot of properties that made sense to sell unless you had a real reason to sell it, right?
Yeah, absolutely.
Susanna would have had a better time than we did last year.
Yeah, well, curious, Susanna, you represent a lot of different range of buyers in the market. So, what were they looking for last year? And I guess has any of that changed heading into this year?
So 2024 was very interesting. I found that a lot of buyers were in the market. However, there was a lot of hesitation. So people were not willing to move forward unless there was a discount. In terms of the asset subdivisions, I found there was a high demand for, but nothing that we looked at stacked up. So there was a huge discrepancy between what the owners wanted, what the buyers are willing to pay, and what the property was actually worth. Also construction prices, the difference between, the civils, the contributions. So that has really had an effect on what was 2024 in terms of prices.
And for this year, what do you think is going to be the trigger for your clients to actually pull the trigger on a deal?
I think we've had a really strong start for 2025, and I feel that the buyers that were sitting on the fence last year are ready to take the next step, and especially because interest rates, there's a lot of talk about them dropping, and then there's a lot of momentum. There is a huge housing shortage that is becoming more apparent. So I feel like this year will be stronger. Just by the way that it started, 2024, there was a really slow start.
And boys, just continuing on, and Anth, I'll go to you. you've had a reasonable turnover of deals towards the end of last year, and we all looks like we've got decent listing volumes for first quarter this year. What do you think is the buyers, talking more so development sites and unit blocks at this point in time, what do they want to commit? Like what are the triggers or what are the metrics that they want to see to actually get it to commit to a deal?
I'll lend you a line that we're throwing around the office. 25 is probably the dawn of a new horizon, is what we dictate.
Yeah.
It sounds lame, but if you go talk about triggers, interest rates are a matter of when, not if, for the first time in a little while. There may be a change of government, right? We are going to have an election, that's for sure. So those two things look like they'll be anywhere from April to June. And thereafter, we're expecting that things will start to get interesting from a property point of view. So, I mean, buyers are still looking for value, but for the first time, I think people have some sort of degree of confidence that we'll see escalation in value of finished apartments.
Yep.
Whether it be off the plan or completed stock, there is going to be some movement there. And so people are already starting to position themselves to take advantage of that. But also going back to what I was saying before, if the cost of debt goes down, commercial investments start to make sense again. So that's also likely we'll see some yield compression.
Okay. And the type of buyers that we're seeing out there active today, like Demi, is it more your established like family office and established developer? Is it more your mum and dad investor? Like what's the nature of your inquiry? You think of people who are actually willing to commit in the
I think for developments, just specifically, probably family office style residential developers is probably one. Small syndications, they're still obviously running around. In terms of blocks of units, it's typically like your mum and dad style investor. Even though they some range up to $10, $15 million, we still have, mum and dad investors that want to place cash into something that's irreplaceable if they were to deliver it and build it.
Why are they doing that?
Because the construction costs are so high. For them to buy a site and build it and hold it, it doesn't make financial sense versus buying a block of units, which actually would be less than what it will cost to deliver that.
Yeah.
And I think that's the main thing for blocks of units specifically. I think that's why people want to buy it at the moment.
Yeah. And I tend to agree with you.
Mm.
Yeah, it's the replacement cost of, well, nearly anything.
Yeah.
Like as soon as you go 5 kilometres outside of Sydney CBD, the replacement cost of any type of asset and what you can buy it for is less than what it will be to actually buy the land and deliver a brand new, which is insane.
And also the holding costs as well.
Yeah, absolutely. So, Susanna, just for this year, and I guess the briefs that you're retained on at the moment, what are buyers chasing? What do they want?
Industrial sites near good logistics, near infrastructure hubs.
Yep.
Is a big one. Also blocks of apartments and subdivisions.
Okay. And Demi, same sort of sentiment. Is that the type of asset that most people are chasing at the moment?
At the moment, we don't have, I'd say, a number of industrial buyers. I think what we're chasing and what we have at a lot at the moment is probably people sitting on cash for investments with upside. I think we get a call probably every day, and I'm sure you're the same, Adam, and I'm sure you're the same as well, but where we have buyers saying we've got X amount of $1 million sitting in the bank, we need to place it. We're just sitting here, we need to place it. And I think they're more interested in buying something that's got income with upside. I think that's probably our hottest buyer, regardless of the asset class.
So that would be your dream listing today. Is some big block of land, decent holding income,
With
accessible upside.
Yeah, correct.
And that's something you're very confident you have a very deep buyer pool.
Absolutely, yeah.
What about a site with no income, with residential site with no income?
Delayed settlement.
Yeah, okay. Well, look, we're going to get to that and what we'd be doing with those type of sites a little bit later. But AP, you touched on a few of the points earlier. I remember the last election.
Yep.
Trying to get a deal done was very challenging, and that was coming, pretty much out of COVID.
Absolutely.
And that was an intense time, but the market did kick after the election quite rapidly.
Yep.
What are the other macro factors you think are going to play a significant role this year in actual deal activity? Because I think that's what we're all talking about. It's like deal volumes are down substantially.
Yeah.
So what do you think will change in the macro environment that will
Return of Asian capital is something that's, I think, really interesting from our point of view. We started to see it towards the second half of last year. It was a theme that was obviously very strong. I mean, we all remember 2018, 2019. It was a massive portion of the market. COVID, for whatever reason, basically decimated that, right? We didn't do a deal to an Asian markets buyer for like 2.5 years. And now we're finally starting to see that come back. That's important from a commercial point of view, but also from a resi point of view, right? Off the plan apartment sales, that was such a big chunk of that market. You take them out, and again, that market starts to not make sense. So hopefully we start to receive the return of that offshore purchaser that will start to spur the market as well.
Do you feel, Demi, buyers are holding off because they're waiting for rate cuts and they're waiting for the election and to see what will happen, or are there established investors or groups with other motivations still willing to transact today? Like, are we going to have a dormant market for the first 6 months? Or
I don't think anyone's going to pick the bottom, right? I don't think anyone can. I think it's just when they jump in and when they see that right time. I think once the rates go up the first time, or even announce that they're going to do it, it's too late. So I think we're seeing, and that's probably what you said, Susanna, earlier, the buyers now really pushing back in to start buying now, because they might buy when it's too late. And when it's too late, our market can change within one interest rate cut. So look, they're waiting for interest rates, I guess, a more positive outlook, but we all know it's going to happen this year, just when. So I think people are happy to buy now. Whereas last year, they weren't ready for that.
Susanna, the buyers you're dealing with and deals you're getting done, which buyers are they? Like, what are they high net worths? Are they mum and dads? Are they established developers? Like, who's actually committing to deals in the current climate?
There is a lot of capital out there, and there are a lot of buyers looking, right? But they're all looking for that right deal. So there are a lot of resi developers where if I have a good deal, it would go immediately. But at the moment, the issue is there's not many good deals that stack up, right? So resi developers, our funds are also looking, mums and dads. Also, this is a big factor. The great Australian dream of owning your own home is no longer there. So for a lot of people where they can't afford to buy their own home, they're now opting to invest in property as well. So there's a lot of buyers that don't want to buy, $3 or $5 million property. They'd rather invest their money into multiple properties in order to gain capital growth.
I've noticed like a particular shift, and I think even our buyers are typically, I feel like they're getting older. Like, the wealth is getting older.
It's affordability.
Yeah, and everyone's chasing an income stream, and the income stream is becoming a little bit more valuable than the capital growth, which sounds odd, right? But even on the mid-market development stock that we have, we've sold them all to like co-living buyers. The majority of them, the sites DA approved for units getting done as a co-living site. And it's, again, just driving towards yield. A lot of established groups, a lot of equity, deep pockets, but want a rental yield as they head into their retirement years. I'm talking more family office, obviously, but, I think it's a very noticeable shift. And I think we can see with the sites that we've listed and brought to market, anything that's vacant or doesn't have a path that's supported by an income stream, getting to move it is quite challenging.
And I think on that point, it's interesting because you say, commercially, if you own something, talking residential development sites or investments, typically in the last 3-4 years, has it gone up in value? You'd say probably 90% of them haven't. They've probably stayed more or less the same, maybe gone backwards.
I'd say more than 90%.
Yeah, probably even close to 100%. So for them, why would they go buy something that's going to grow, so to speak? They want something that's going to, I guess, keep them afloat and keep cash in, keep that turning, because for them, I think the vision is, I could have bought a house and made more money than buying a commercial property.
Yep. How many times have we heard that?
So for us, it's going to be more about how much yield we can chase, how much income we can produce. And if there's upside, great, but they're not going to bank on that indefinitely.
Yeah, and I think with every deal is you've got to find out what's the defensive position, right? What's the fallback? Because at the moment, everything is risky.
Yeah.
I'm talking more development, obviously, but everything has a high degree of risk.
Yeah.
So if there's no income play, well, good luck trying to get premium value for the land compared to what it used to be 3-4 years ago. Anth, I'll come to you on this next topic. Obviously, housing affordability is a massive issue. It's very well publicized, very well documented. A lot of the challenges now with delivering supply is cost of construction.
Yep.
And I know there's a lot of infrastructure being delivered, and there's a big change in the planning environment as well.
Yep.
The affordable housing incentives, the 30% bonus. Have you seen, one, developers take it up?
Yeah.
And two, has it had any direct increase on the land value?
Unfortunately, the answer to both of those things is probably no.
Yeah.
It's pretty few and far between examples where groups have taken it up in the first instance. And secondly, it definitely doesn't make the site worth more. I mean, in our experience, maybe speaking more to the market than the policy, but unfortunately, I don't think it's worked.
Yeah, no, I tend to agree with you. I think it's been undertaken or taken on by groups who are probably already going to build the site anyway.
Exactly.
And I don't think anyone's actually bought a site with the intention to activate it.
No.
So yeah, no, look, it's making I think it will help with supply, a very small amount of supply, but it's not bringing new players into the market, and it's not activating the sites of scale in suburban markets that you need it to actually solve the issue.
Yeah.
And Susanna, what about like new infrastructure? Like, what are your clients looking for? There's obviously a lot happening around Sydney. It's been crazy the last 10 years.
Yeah.
Does that form part of the decision-making process for your clients as to where they're going to put their money?
Not necessarily, but if it's near, located near a train station or amenities, potentially, but it's not a deal breaker.
And Demi, just with the Southwest Metro, have you seen any developers started knocking on doors now? A lot of those suburbs are being rezoned.
Yes and no. Like we actually have a lot of proposals and pitches out, but I think what we've started to see is that I think the vendors' expectations have been inflated quite a bit due to probably a couple of things. Developers, yes, approaching direct and making stupid offers that don't make sense and aren't real. And number two, like that house value or whatever that value is of that residential property we're talking has probably gone up so much over the last 2 years. It's probably close to what it's worth as a development site.
Yep.
So, a typical house, let's say Marrickville as an example, if it was to get rezoned, could be worth anywhere between 2 and 3 mil. And that site might be rezoned and it's probably worth 2 to 3 mil. So why would they sell? Even if it's 3.5, it's probably not worth their time. So yeah, there is people out there circling. I think where it's hurting mostly is once you get further west. I think that's where it's becoming void.
Yep. And on the flip side, obviously there are a lot of tight controls on the north side.
Yep.
Where land rates and GFA rates are higher.
Yep.
And a lot of those sites didn't sell.
Yep.
I think only 1 or 2 might have traded.
Yeah, 1 and 2
since it's happened.
Yeah.
So why aren't they selling?
I think it's a function of the same problem where the house is still worth a lot more. We had a really interesting conversation yesterday with a few homeowners in a suburb that's also just been rezoned. If you take 100 houses out of the market, and those 100 homeowners are going to want somewhere to live, right? And they're probably not going to move that far. They're then bidding for whatever there is in the market, less 100 houses. So in 2 years' time, you got a real problem, right?
Yeah.
If you've done a long-dated deal and everyone's bidding against each other to buy back in the same suburb, there's hesitancy there from homeowners, right? If their home is their biggest asset and they're not a property person, that's a pretty daunting decision to have to make.
Yeah, absolutely. Well, particularly if the upside's not.
I mean, if it's
significant,
on a $3 million house, are you going to risk it all for that?
No,
probably not.
It'd probably cost you that just to move.
Correct.
Yeah. Okay, fair enough. Now, a lot of the markets that we play in, guys, and this question's more so for you, and Demi, I'll get you to have a crack at this first. I don't have a solution, so I'm hoping you do. But if you have a site where your revenues are under, call it 10,000 a metre or under $1 million for a 2-bedroom unit, that site is probably no longer viable. Is that a fair comment, you would say?
Yeah, 100%.
Okay, so what's a potential solution for these landowners with very little income or a very aging building with an expiring DA? What would you be saying to someone like that?
Look, it's tough. It really is, because you're talking, let's just talk $10,000 a square metre. To build something today was probably in the vicinity of $5,000 to $6,000 a metre. You got to buy that site and might owe you $3,000 a metre. Let's just call it. There's not much change left over.
Well, you're losing. Those numbers are losing, yeah.
So, whereas it used to be the case where it was $3,000 a metre to build, $4,000 a metre to build, and maybe $2,000 a metre to buy. So, yeah, it doesn't make sense. Where we think there's got to be some, I think, help and assistance from government is maybe one, fast-tracking those DAs in those areas and maybe making it a bit more beneficial to unlock that 30% of that GFA for affordable housing. And number two, maybe start upscaling those rezonings in those locations, because then maybe that $10,000 a metre might make sense across the whole site.
Yeah.
It unlocks more value for the owner, it unlocks more. But I just think, we've got a lot of sites that are under $10,000 a metre that are virtually sitting there, vacant, land tax bills rolling in. It's just burning more of a hole in their pocket. So, look, it's a tricky one. I just think the government has to help. And it's fast-tracking DAs, fast-tracking CCs, just being more proactive to support a development versus against it. Because not everyone there today is to develop a piece of garbage, more or less.
Yeah.
I mean, you can speak to this probably as much as we can. If it costs you 500 grand to build a unit, 250 grand of that is in paper costs.
Yeah.
It's getting a DA, it's your holding costs, it's paying contributions to the council.
Yeah.
Like, that's mind blowing when you think of it.
Yeah.
Half the cost of building the unit is not building the unit.
Yeah.
The only way that gets fixed is policy reform.
Yeah.
Yeah.
Yeah. So are you seeing owners loosen up to different types of deal structures? Like, are more JVs being considered? Are owners trying to leave their land value in? I mean, no one's got a bottomless pit of money to hold a site forever, right? And it's been 2 years of these conditions.
Yeah.
Are you seeing any change in the sentiment of these owners to try and do a deal or find a solution?
That's for sure.
Yeah, I am not arguing that they're more motivated, but deals still aren't happening.
Well, I think there's probably two things. They're either taking a somewhat of a loss on the values, which they have to, which we have sold recently, a couple of properties that they've done that just to get out in quick settlements, or they become more flexible in what they're offering. What I mean by that is just give 2 years, give 2.5 year settlements, give, maybe conditionalities, be a bit more flexible. And we're talking about the stuff that's like $10,000 a metre too. In saying that, we've got sites that are, pitching for 30 grand a metre plus, and we're still offering terms. So I think the more terms you can offer, I think the more comfortable it is to get that number.
Yeah. Yeah. Look, time's become a very valuable commodity on every site, and the longer someone has to, until they have to fork out their money, their actual hard earned to invest into a site or defer that land payment, that's pretty much the only way I see these deals actually become viable.
Yep.
If the landowner's not willing to be flexible and be open to some sort of joint venture or some sort of stage payment, or it's going to be near impossible to get these sites activated. And, you've got a huge amount of supply coming from Canterbury, Marrickville, Dulwich Hill, Belmore, Campsie, and, they're saying 30,000 units, and there might be enough floor space there.
Yeah.
But I don't think there's actually any chance of the site's actually coming out of the ground.
Yeah.
So now, obviously, we're all involved in the development space, and the last 2 years we've seen a pretty substantial shift in how we do deals and how we run our business. Susanna, what changes have you actually made to respond to the requests of buyers in the marketplace?
I would say probably educating them a little bit better and just not, just giving them what we have. It's more understanding their brief and understanding what they're looking for and why they're looking for what they're looking for, I suppose. Within my business as well, I've implemented a lot of automation. That's helped a lot just to save time and just resource.
Automation around what specifically?
CRMs.
Yep.
Just the way that we do things as well for the last 12 months, I'd say. That's, you can do anything with AI, really.
So, yeah, a bit scary.
Yeah, it is.
Yeah, going to take our jobs.
Yes.
Yeah. When you're pitching a deal to a client, what are you giving them? Like, how do you profile a deal to?
Yeah, okay. So it's really about understanding what they're looking for. So meeting with a client and getting on, if they're looking for a development site, it may be that they're looking for a residential, but they haven't ventured into commercial, self-storage, or whatever it may be. It's about understanding the return that they're looking for and also the time frame. So rather than just, taking down their mandate and then going and sourcing it, it's more so, okay, how about if I showed you an alternative way to get the same return that was quicker or more profitable? And I'd say most of the time they're very open to it.
Yeah.
And then, it could be JVs as well. At the moment, a solution for the earlier topic would be joint ventures or syndicates where, someone has capital but not servicing. So it's just about really brainstorming and networking with the right people.
Yeah. And what about risk appetite from your clients? Like, has that gone up or has that gone down over the last 2 years? How are you seeing it?
It's gone up. A lot of people want a good deal. So how you buy is where you make the money.
Yeah.
Risk appetite, it's really depending on what the asset is.
Yeah.
I think it's important to have a look at comparable sales in the area, and if they've bought well, then it's not very risky.
So if we're talking like, for example, strata residential, because there is a lot of excess, or there's still a bit of excess stock floating around. Like, what discount factor are your clients looking for if they're going to buy bulk residential?
20%.
20%, that's sort of the minimum entry level. Yeah.
Otherwise, it's not worth it with interest rates.
Yeah, and your clients want a certain rate of return on the income.
Yes.
Right? The capital gain is the long-term play, but the short-term, they want it to be able to support us.
20% discount on purchase.
Yeah. And Ed, I know your business has changed a lot over the last couple of years, and your involvement with the business has changed quite a fair bit. What have you guys done in terms of, one, the type of assets that you're chasing, and two, the type of service and information that you're providing to clients and buyers?
100%. The developer market obviously has been quiet. There's no secret. So we have pivoted into other parts of the market. Thankfully, we've always been pretty active in co-living in the boarding house space. That remains still very active. Rents have been really strong, notwithstanding construction costs and yield. I guess yield's blowing out a bit. The co-living market still has remained really strong, and we see that continuing on probably for the foreseeable future. Industrial, Susanna mentioned, obviously is still probably the strongest single asset class. There's appetite both from owner occupiers and from developers basically seeking to get away from the red tape of delivering resi. So that the challenge is getting land. Industrial land in Sydney is hard to come by. So that's been another, I guess, focus of our business. But you're right, we've moved away a lot from passive investments. Hopefully that will come back. But I think from where we came from in COVID with such a low yield environment, a lot of owners, unfortunately, were stuck sitting on assets that were underwater.
And Demi, do you feel when you're running a sale process, what sort of information are you providing to buyers? So like you get an inquiry, what's the expectation of that inquiry now for what they get back from you to actually process it and understand what the opportunity is?
So typically, depending what it is, if it's a development site or a block of units or an office building, we generally provide them with a summary enough to get them, I guess, educated initially. If we start having more dialogue back and forth, we provide them, for example, it's a development site, GR evidence, what the apartments are selling for in the area, what the value and feasibilities that we're putting in on our models to substantiate why we think that price is what it is. So we don't just put a price to it and expect it to sell. We prove and, I guess, fact check it with everything along that. So I think from our end, it's more of a discussion base with our developers. Why do we think it's going to sell? Why do we think it's going to make money? Why do we think that the GRs are going to grow in 2 years' time? By the time we finish this site, the apartments might be worth 10% more. We can't prove that, but looking at where we're heading, there's an undersupply. There's obviously a talk of, the rents have obviously been going up continuously year on year. So there's just a bit more positivity that there is going to be some sort of growth, whereas the apartment sales or whether it's the rents. And I think everyone's happy to accept that. It's just where we're having the biggest challenge is how much it's going to cost to deliver it. And I think that is probably the only thing. It's back to your question before, if I could change anything, I think it'd be somehow reducing construction costs, because I think that would deliver all these units that we're waiting on.
Fair enough. And do you think buyers have got lazy? Or they're disengaged?
I think they're very hesitant and very cautious. We did a bit of a review at the end of last year. The vast majority of our purchases last year were not using their own money. Either it was on behalf of someone, they're a listed group, because when it's your own money, you put it on the line, you want to be sure. And last year, there wasn't that much certainty. So I think it's more disengaged than lazy.
So how do you turn that around? Like you've all got plenty of properties for sale. Susanna, you're representing a lot of buyers. You've got to get them to the finish line as well. Like, how do we change it? How do we get buyers more excited and comfortable about a deal? Is it more face-to-face? Is it on the phone? Is it data-driven? How are you making any changes to try and get people?
Educating them. I'd say educating them around the asset and just get them a bit more comfortable what they're buying.
We also have to demonstrate value as agents. Like before, you could put a property up for sale and it would almost sell itself, right? The property spoke for itself. If I can't explain to you how you're going to make money out of the property, we got nothing. Right? And that's got to be backed by data, of course. But that is the biggest change in our job.
And we've also changed in, we don't just list everything we get. We get a lot of opportunities thrown to us that we turn down just because the price is too high. And I think that comes down to, back to your question, like, how do we make them believe in it? Or we got to believe in what we're selling. And if we think the owner wants too much and it's blue skies and all this, we're not going to take it on because it's just not going to sell. So I think if we believe in it and we strongly feel like we can trade it on that level, then yes, we'll take it on. But if it's 20% above, we're wasting our time. The buyer's going to get this, upset at us and not bother dealing with us moving forward. So we try and take on things I think that are realistic. You have to be realistic. Vendors, buyers, it just makes things a bit more easier.
So I'm with you guys 100% on this because I think there's still a lot of capital out there, but when it's a hot market, everyone is looking. So as soon as you advertise, there's an instant response.
Mm.
You get 100 inquiries, your phone's ringing off the hook. Whereas now, you know, if we send an e-brochure, like sometimes it's legitimately crickets. There's nothing there. But I found that if you can demonstrate that value piece and actually call your 10 or 20 or 30 most qualified groups and have that pitch along supported with the data, but actually personally delivered.
Yeah.
I think the days of just sending an IM and hoping that it sells, they're long gone. 100%. And they have been gone like for all of last year.
Yeah.
That personal approach, I think having the right agent on the job will make a substantial difference this year. Like I know you guys push to your specialty and your core markets, and I'm very, I've doubled down on that substantially within our business. But if you're not specializing, you're not providing that personal service, and you're not actually introducing that opportunity face to face or directly over the phone, you're never going to get the engagement on it.
It goes back to what you were saying before. In a hot market, there's 30 buyers for a property, right?
Yep.
Today there might be 5.
Yep.
2 might be busy on something else. There's 3 people.
Yep.
It's our job to know the 3, right? And to push them and make sure they're looking.
100%. Susanna, do you have a preference? So if you get a certain brief, are there particular agents that you know to go to within the marketplace?
Absolutely.
Does that make a difference? Does it make your life a lot easier?
Yes. Yeah. Well, generally I get calls as well from agents, but just before anything comes on the market.
Great.
I get the heads up.
So what would you be saying to a landowner if they weren't selling directly to your clients?
Yes.
What would you be telling them or suggesting to them in terms of the agent that they pick?
Transparency and honesty is a big one. You need to trust the agent and, also resolve.
Yep. Okay, great. We're going to go through our last topic for today, which is buy, hold, sell on a range of different asset classes. It can be a one-word answer, or you can just elaborate a little bit as to why. But we'll shoot around and we'll go, Susanna, around to answer. So buy, hold, sell on residential development sites sub $10,000 a square meter. Hold. Demi, hold.
Definitely.
Yep. Amp.
Hold on for dear life.
Yeah, I'm sell. Yeah. I'm sell.
Okay.
I don't see a change in the near future.
Yeah.
I think if you're getting close to your money back, or you're just going to have to cut your losses and move on.
It's likely the last thing to recover in the resi cycle, right?
It will be.
Yeah.
Without a doubt. Yeah. If you, I'd say try and target co-living. If you don't, just get a co-living.
As an alternative use.
As an alternative use, or any kind of alternative use is probably a higher and better use than what is there. So I'm actually sell.
Yep.
Industrial development sites.
Buy.
Yeah, buy.
Hi. Buy. Established industrial.
Hold.
Just sell. I feel like that market's got to be at midnight.
Yeah, I think I'm trying sell too. I think it's at 11.55, and there's not a lot of upside in the next 12 months.
If there's value, then you'd want to sit to keep it.
Buy, hold, sell, established co-living and apartment blocks.
You would hold.
Sell what? I think the rents are inflated, personally.
So you think rental market's going to cool off?
I think it's already started slowly.
Yeah.
I mean, I think you could probably vouch for that as well, but I just feel like that's... And the rents aren't going to get back to this level. They might just stay the same. It works.
Ant?
I'll agree to hold.
Hold? Yeah. I'm buy. Depending, especially below replacement value.
Yeah.
I'm definite buy.
On blocks?
On blocks.
Below replacement
on apartment blocks.
100% I'm with you.
Yeah.
I agree.
So, co-living at peak rents? No.
No.
Yeah.
That's for,
No, I'm probably hold. Sydney CBD A-grade office building, buy, hold, sell.
Hold.
Demi? Hold.
maybe buy. It feels like that market could be moving again.
Yeah.
It's been pretty slow for 2 years.
Yeah.
Yeah, if you're brave and you want to be counter-cyclical, it's probably buy time.
Yeah. Okay. I think buy too.
Yeah.
I think it's A or nothing.
Yeah.
And
Totally.
can't build anything else at the moment in the CBD. So, buy, hold, sell, B grade or lower office building.
Sell.
Buy.
Demi, buy.
Yeah.
Yeah.
It is explained.
I'll explain to you.
Yeah.
I'll explain to you why.
50% vacancy.
No, because I feel like the B grade typically or lower office buildings, and I'm talking more like suburban markets, the rents can't get worse.
Right.
The
Could be vacant.
replacement value is similar to apartment blocks, can't get worse.
Who's going to lease it?
The vacancy rates are, I think, 10%.
I actually don't see the vacancy as high from what we've seen in like the office buildings. Like we're working on a few at the moment, and the office buildings we find in suburban markets are actually tracking better than what I think. I don't work the CBD market than what the CBD is in terms of vacancy. Because how often are you going to have a new, building being built in suburban for office? There's virtually none being built.
Yeah.
And I just feel like at the moment, like it's good buying. I think generally those B grade assets have upside. They have more of a rental reversion. They might have a different angle to it. So I don't know. I just believe in that.
Interesting take. Ant,
Sell it
sell.
quickly as I can.
Yeah. Yeah. I'm sell.
You guys are selling at the bottoms. That's the problem.
Yeah, I just don't see a recovery in the medium term. I think there's more opportunity elsewhere. Buy, hold, sell on strip and suburban retail or commercial properties.
Hold.
Hold.
Yeah, I'd hold as well. I think holding's safe.
Yeah. And
If you have a good tenant, I'm holding. Anything less, I'm cashing in.
yeah, I'm hold to sell.
Yeah.
I'm definitely not buying. I don't see how strip retail is going to make a recovery. You just can't see how rents are going to grow in the medium term. Buy, hold, sell co-living sites.
I'd be buying.
Buy.
Yeah.
Yep.
Sell.
Sell.
Still think the construction costs are too high for it at the moment.
Yeah.
I just don't think it makes financial sense to follow through with it.
Yep. And
Location driven. In
Yeah.
Sydney, I'm probably buy. If you're 5 or 6 Ks out and any further, I'm probably selling.
yeah. I'm again, it's depending on location.
Yeah.
I agree. I think I'm still more buy. I still think that's the only. I think just generally speaking, it's sad, but a lot of people are getting poorer.
Yeah.
And the more product you have at the lower end of the rental market, I think the more growth and occupancy you're going to have. Premium development sites targeting downsizers, buy, hold, sell.
Sell.
Sell?
Unfortunately, nothing's working at the moment with construction.
Yeah.
Selling.
I think if you hold, it's not the worst thing. And if you sell, it's not the worst thing either. Because I know it's a bit contradictory, but like I think for us, if you hold it, the apartment values definitely will go up on that. I just don't think there's anything premium is not going to be replaced soon. Like if you look at the eastern suburbs, not rezoning, they're not adding more units.
Yeah.
It's very hard to replace that.
Yeah.
And I feel like if you wait 5 years, it might just get better.
Yeah. And
I think it's the only part of the market that works.
yeah.
40 grand, 50 grand a metre GRs.
Yeah.
Buy, and it's probably the only thing that makes sense.
Yeah, I'm buy. If you're a developer, you want to keep working,
That's the space.
you can make it up in the GRs.
Yeah.
I think that 20 to 35 grand a meter is probably the sweet spot where you actually have buyers. I'm scared about 75 to 100,000 a square meter sites. I don't know how many buyers you have for $10-15 million apartments. or how many are left, but I'm more buy. We're talking now existing strata residential mid market, so 5 to 15 k's from the CBD. Buy, hold, sell.
Hold.
Probably buy. I think from that.
Yeah.
Fill your boots.
Yeah.
If you can buy a 2-bedroom unit for 800 grand and it's a 600 grand to rebuild that unit,
I think so too.
it doesn't take a genius to work out what has to happen next.
Yeah, I agree. I'm buy and hold. Anything established, and that's good building, good integrity. I'm definite.
That's the key, though. You want to make sure it's a good building.
Have to do your due diligence always, but replacement value, getting new supply in those areas is going to be, I think, near impossible.
Yeah.
So only one way up for values in most of those suburbs. High-end residential, whether it be strata or freehold, buy, hold, sell.
I'd hold.
Hold?
Buy and hold.
But yeah, I'd hold. I still stick with the premium development site. I think that's a good angle to hold that.
Yeah.
Hold is probably pretty safe.
Yeah. I feel I'm hold. I don't think it's the best conditions to be selling. Is there a definitive argument to keep buying? Probably not. So yeah, I'm probably more of a hold. Guys, thank you very much for your time today. It's greatly appreciated. I'll pop everyone's contact information at the bottom so you can get in touch with Susanna, Anthony, and Demi. But guys, good luck for 2025.
Thank
Thanks,
you.
Adam.
Hopefully it's better. Hopefully it's better than 2024 for all of us.
Thanks.
Let's enjoy the ride. Thank you very much.
Thank you.
Thank you.
Cheers, guys. Thank you.